Turn the recording on. All right, this is December 17th, 2023 backtesting session. So let's go to NASDAQ here. Yeah, let's see. Okay, so gonna have to go back to a particular date. Let's see how far back we can get with the 5-second chart. So we might be able to drop down. Oh no, that's only 3 days. Yeah, no. No way. All right, so we'll just go all the way back to. You guys want to do London pre-New York? Ending of London pre-New York? If you do trade in a London session, 4:30 Eastern Standard Time is equivalent to 10:30 Eastern Standard Time. The 10:30 mark that I give you guys, the 4:30 time is equivalent to the 10:30 in London. All right there. So here we are. We have nothing here. We have nothing here. We don't know what took place. It could very well be up here. You know, that could very well be to something down there. As a reason for why we're even getting this move back up in that direction there. So let's just act like that stuff is back there. It could very well still, come from something like that too. It doesn't matter. We don't have to know where it came from. Not when backtesting, because backtesting is about price discovery and being able to place yourself into what price often does. So just gonna take that there. Right there. So I see we're in a range currently, and there's there's 2 points that I'm willing to look for longs. And of course it's down in this region here and just below this. But should it trade up above that way and drop back down, then I'll be looking for one here. So that's my mindset. If this was the price that, I woke up to, and it was London session, and I wanted to start looking for an entry, this is what I would be willing to do. The price put in another high, I'd be willing to take along there. But until it takes out that low, I'd wait for lower prices, unless it, again, moves in that direction. So for anybody else, do you guys have anything set up? Any entries set up? Any where would you be looking to long versus short? As you guys know, this is the previous swing or the down candle on a higher time frame. So what would some of you guys be looking for? Will this be recorded? Every scheduled stream is recorded. Scheduled stream is recorded. Hey, and let me stop and say this real quick. There's about 168 people here. So somebody emailed me, one of the students. This was with, it appears to be an email they just created just to send the email, so you wouldn't see who they were, which I would understand why they did that. But they wrote to me and told me that they were concerned because the last few streams, they're filled with. Let me read these words, because I want these words to be put into perspective with both what you guys pay, how much I already give to the community, and the extra mile that I go as well. But let me just so they said, I've studied all the videos at length, taken notes, and I'm practicing every day in the markets, applying the concepts I've learned. It's working. First of all, there's no such thing as studying all the videos, because I promise you, there's so much in there that it will be years before you fully grasp what's just in the free playlist alone. But cool, moving forward. I get that you're trying to weed out folks who don't study, put in the effort before you move on to the next stage. However, the live streams this week have been challenging, not because of your teaching, but because of you engaging and entertaining who obviously have not put in the work and asked dumb questions over and over again. You get annoyed, rightfully so, go on rants, and we all lose. You hear this? We all lose. They are really taken away from my time to learn and your time to teach. I completely understand that approach. Not going to tell me how to run the service. I want you to be aware of how the live streams are coming across for someone who has put in the time and effort. So they said, I want to hear more of your thought process as the candles are printing and why you feel price is going to do what you think, and less rants. So definitely have some logic in that statement. Maybe a little more caring than logic, but the videos that are there is enough to know what I'm thinking, because I explain what it is that I'm thinking prior to even drawing it on the chart. As far as the rants are concerned, this is not a call and receive live stream. Tell me what you are. Let's put a pin in it there. That's not what the live streams are for. It's to help you to build a narrative and price. But I said this is a mentorship, right? It's saddening that most people are used to mentors who do not get involved with them directly, who do not get to know them, their habits, call them out, chastise them for things that they are doing to help speed up their development. Things they aren't doing. What do you think mentorship is? If there's people in the chat struggling and you can't deal with that struggle based on them as a trader or based on them as as a student, as someone actually learning. Mentorship is about being directly involved with people. So the first thing I'm going to say to that is that I don't work for anybody here at all. Not one person in this building I do not work for. What we are doing is discovering price in real time, and I'm helping you guys to create a framework and build a narrative to make you become successful. Do you have the information to already be successful? Yeah, you do. It's out there free. Everybody got it. But you're here because there's you in the way. You are the obstacle. And for me as a mentor, I have to deal with that, with you. I cannot call myself a mentor. Can't call myself a mentor when I'm not directly involved with my students. Whether it's an airhead student, whether it's a resistant student, whether it's a willing student, whether it's an excelling student, you have to understand that there are many different types of students here. Many different types. If you're here to learn, I suggest you cancel your subscription and go learn from the free playlist. That's a bad trade and a poor use of risk management. This is mentorship, not call and response teaching. Tell me how, without all of this, clean the fat. Are you ordering a sandwich? Because I don't make them. So, if this is about mentoring to help you to understand yourself in the market, what you see what others see. You see the lack that they're seeing with the lack of clarity. Yes, there are people who came in who did not study the way they were supposed to, the way they were told. But there has been more than enough grace for a lot of people here to catch up. We've been harping on the beginnings, the beginner stuff since we started. And the beginner material is enough for people to catch on fire the way they are now. So while they are developing and while they are progressing, guess what's involved with the other side of mentorship? The other side of mentorship is now to deal with them as a trader. And that's the thing that the industry lacks. That's the thing that it lacks. No hands-on approach to cultivating why you become profitable. You become profitable because of consistency. But if you can't be consistent yourself, somebody who you call your mentor, I'm sorry, the person teaching you how to navigate that's where they come in. That's their duty, their job. To step in, put you into perspective with everything going on, your peers, what the market is doing, what you're doing. That's what mentorship looks like. I think you got it mistaken by thinking that it's a one-to-one, because it's not. There's plenty of people with different ways that they learn, with different understandings that they have, who speak different languages. We often miscommunicate with each other at times. What makes you think everything should run the way you need it to? Because you're here to learn. Which, that's not the purpose. I said I don't charge to teach people. The playlist is proof. But in terms of mentoring, that's a different story. I don't think you might know what mentorship is. And if you did, you would understand mentoring all of these people who are here and the different personalities and the different temperaments and the different egos, and you would understand that stopping to play the flute for you is an absurd request when there's so many videos already created that could help you to go in depth with what we continue to show each and every day, over and over again. So I'm just addressing that for that student, along with anybody else who has that mindset. 800 people here, and you expect to snap your finger and call somebody to the floor to tell you to better take his 129 down to Morgan Stanley and bring that type of energy. I bet you won't. So you can head over to the cancellation celebration spot if you I'm actually gonna change the name of that channel, cancellation celebration. You might as well go over to get the commencement ticket out of here if you don't agree with that. All right, guys, so let me look at this chat. Sorry, I just had to explain that. Hey, you see that? You see what Big Blue bite? Big Blue bite. I said bite. Big Blue kite. You see? Come on. I was gonna say BBK, but then y'all gonna take it too far. So, look. You see what they said? The threat of being chastised by Dave has made me work 50% harder to nail the concepts. That's a gift. Thanks, Dave. And I'm responding to this because this is a person who understands what pressure looks like. Pressure. You hear that? Pressure. You only apply pressure to things that you believe are worth your time. So when I step in and I see a student that should be moving a lot faster than I know they can, but they're coasting, I'm going to step up and address it. I'm going to step up and hand down tasks. I'm going to put pressure on you. And if you can turn around and respond to that, there's so much more that comes into guiding your particular habits. I know Magma's going to be able to out-trade almost everybody here. But such a stubborn old mule sometimes. But I know the mind is there. I know that he should be a lot faster. And if he just added structure to it, now he would be able to run a lot further. It's not about just being faster, but it's getting farther too. Speed and distance. He has the speed. The distance, not yet there because no structure is involved yet. And that's not in the concepts, that's in him. So I'm going to be hard on him until he gets it right. And there's a couple other people I'm the same way with. I was that way with Shaz. I was that way with Discernment. Some of the other people you guys see, you don't comment here. I was the same exact way. Because you are far more capable than where you currently are now. And I'm going to put that pressure on you. And those are people who bounce back and come back and show up to work and show what they're doing. Regardless of if they're scrutinized or not, they take what they're scrutinized with and they refine that and become better at that within those boundaries that you give them. That's the prime mind that's quickly moldable into what they need to know. into the concepts, being able to see. The reason why I'm able to trade the way I do is because I see everything. I factor in everything already. Everything. And I just take what's likely or what's of a higher likelihood versus what's not. So what do I mean by that? What I mean by that is, if I was to take an entry somewhere through here, with these highs being here, let's say price traded back into here, I need to know that the likelihood of this failing is high. Why? Because the equal highs, that at least gives us this low and potentially this low here. Now, could price run that way and just continue straight up and foil that idea that I had? Yes, it can. But what I'm considering is a scalp move could be present here, but a larger move could be present under here. Why? Because two different things, tapping into a zone versus running stops. So I know that even if price begins to drop down here, and let's say dump with a bunch of red candles, doesn't even give me any relief, nothing at all, I know that within this region, we're getting ready to move up into that direction. But how do I get involved if should price continue higher like that? How do I get involved in that? Now, of course, you take into account what's back here. You take into account what's happening here. If you just see that we're getting ready to form a range up there before moving back that way, should price drop down here, I know that there are areas that I can trade within down here to find a quick push back up. So I have all of these things readily available to draw from when the market is moving. So that means that for me, though I have one kick, I have quite a bit that I'm able to engage with. Because the kind of mind that I have that considers all aspects and thinks of all things and tries to wrap my carefulness around what's higher likely versus what's not. So I need to pursue the higher likelihood. From my personality, I don't want to lose. I don't want it to cost me capital. So, all of those different things you have at your disposal, all those different considerations that you put out there. And now all you have to do is take one or two of them. Ain't that crazy? All you have to do is take one or two of them. And you're set for the day, for the week, whatever, you're set. So, I saw some people saying they posted some charts. Somebody has Arkham as a zone at the top of the range. I would not be using that, as I mentioned. Ziga has a zone there. Let's see. Stotts has his zone there. Okay, we'll wait for that to get taken. Let's see. XEL, your zones are off. When price is bullish, it's making higher highs and higher lows. And higher highs. You see that? The previous higher high in the new higher low is what you're drawing your box around. The previous higher high and the new higher low, when we push that way, that's what you're drawing it around. That's video 1, 2, and 3. And 4, and 5, and 6, and 7. And 8, and 9, too. So be sure that you're drawing it properly and following structure. Let me see. Somebody has started down there. Okay, all right. So let's click forward. Let's move it forward some. See what we get. So is anyone I didn't ask, is anyone taking a long is anyone positioning themselves for a short? Take a long once those lows get taken into the white box. Okay. Look like a range origin long. Okay. So let's click forward. So anybody paid? So tell me this. When the market actually does this, what stops most people from just longing the zone? This here to the left. Is it because we pay attention to this? And do we want to see that go like that? And then in the event that we get up, we reject the way, get a little happy, and then of that. Because quite a bit of y'all said the white box, which was great, but I wonder if this is the actual trades we wait for. You know, so even with backtesting, you got to be honest about that too. So I know there was a few people who said they would do the 50% of the white box, and you know, so there's some people there that's willing. They have that understanding. So is anybody looking to short up here? Because see, some people say they took their money. They took their money out of there. That's okay. And that's why I said stop thinking 5 points, 10 points. This is let me just stop and say this too. Stop thinking 5 points, 10 points. Stop thinking that. What you think is in the zone, 1-to-1 on the zone, and whatever that affords you. It doesn't matter. It could be on the hourly, it could be on the 4-hour, it could be it could be on. Come on. Oh, no, I just lost everything. Look at Bitcoin. This is the 50% right here. Gave a 1-to-1 out of it. I just want to take it from 837, you know, all the way to 42. I didn't say I wanted to take it $400 up. It was in the zone, out of the zone. And that was the 15-minute. That was the 15-minute. In the zone, right here. Out of the zone, right there. 15-minute chart. So let me see how I'm going to do this. Just need to go back to where this drawing. Let me see. Oh, right here. Okay. We don't know what's happening there. You see, it's flat, so we don't know what's happening there. Let me see. What do we say? All right, we're in London right here. So, great job for you guys that chose that. Bring my headphones down a bit. Yeah, right there. Thing that trips me up on those tiny one-to-ones is waiting for confirmation already makes it not a one-to-one. Actually, that's not true. I think the reason why that trips you up is because you probably don't backtest. Because most students who do backtest understand that even when you think there's no confirmation in here, there is. And most times, 5-second confirmation you could even get from these. So if you're talking about 1 minute confirmation, now that's a different story. If you don't know how to read 1 minute candlestick structure, then of course there's going to be that missed opportunity. But if you become familiar with trading with zones that align with structure and you start to see the power of how one-to-ones oftentimes helps you more than it goes against you, then you'll see that it's the confidence is, it doesn't come from forward testing. The confidence comes from back testing. The confidence to take that actual entry, whether it's confirmation or no confirmation, it comes from back testing. And that's why I feel bad for a lot of the people who don't want to back test, because you're not going to be profitable this year or next year or even the following year. And I think the year after too. Maybe, hold on, let me check the calendar. Is it this year, next year? Let me just check where we at. Check on your profitability. The following year, okay, that's 2025. Yeah, the year after, we said 2026. No, so I don't really see it until 2027, to be honest. If I really think about it. Maybe like 2027, October, you'll find some profitability if you don't want to backtest. So yes, perfectly. We tap right into the zone. Is this a zone that myself, Dave Teachers, is this a zone that Dave Teachers pushy button on? No. I already told you guys what I was waiting on. So this would not be the area that I don't care if I saw it and it tapped to 50% and it went up and most people are already eyeing this. Already like, oh yeah, it went up, it should come back down into here and then go up and then grab that equal high liquidity up there. Okay. Mr. Teachers is not even paying attention to any of that. Because for me, my expectations, my personality, where is it that I am willing to enjoy a piece of the pie? Usually it's when something comes quick, not keeping me in there 10 minutes. 10 minutes? It's not me. So I'd rather wait until some people get taken out and then I'll find my move. So it's great if somebody else found an entry there and are willing to take that because that's they kick their back tested. Cool. That just is not my appetite. So look at that. Where's infamous Canadian? You here? If you're not, I'm sure you're going to watch this. This is where people get this confusing thing. I don't know what it is that I might have introduced that made somebody believe that this is the way to trade. But a body closure above a previous candle means nothing to you. It does not mean that you're flipping bullish to go in that direction. Now, I know that it is tempting to take that whenever you see that happen. It obviously looks like price is getting ready to find some momentum throughout here to give a move up into that direction. So I know when we're zoomed in, we're tempted to take that as a tap and continue. But remember what we said about downtrends. We said when the market begins trending the other way, you're not looking for confirmation longs. So that means that when price flips up, comes back to that area to confirm, you're looking for that to fail. When price flips up, come back to that area to fail, you're looking for that to fail. When price trades up, comes back to that area to test it, you're looking for that to fail because this is a downtrend. So looking on this side of the market to take up an entry from here, bolstered by 2-3 contracts, whatever, 5 contracts, 10, whatever it is that people are trying to bolster by that. This is how they're losing most of their equity in these little moves. I've had students who wanted to just localize it to the lowest risk possible to take. Okay, if you want the lowest risk possible, it is possible to do that, but with rules, right? With rules. Failure to close above. Here, this low, we talked about this equal high already looking like it's looking for that at least. So why would we be in here wrestling with an entry to go further up here when we know that narrative says that we have the possibility of running below this? And we already know that Mr. Teachers says no zones at the top of the range. You do not prioritize taking entries off zones at the top of the range because oftentimes those zones are created to fail. That's why all of it is needed. You're not going to remember all of this even today. You can go back and listen to this tomorrow. Guess what? Tuesday, Wednesday, you'll probably take a setup that didn't adhere to these rules. That's why we prioritize watching these things over and over and over. So it's basically in our instinct to follow what it is that we've been consuming. It's instinctual now. So it was just a added soundbite there for you because I know you I saw something in the chat about that. And I did tell you, whatever works for you, follow it. But also, I know what works for me, and that's what I teach the students to follow. So you might find something that works for you that's not even a part of what I teach. But then you're going to have to collect your own data on that to try to become profitable because I can't give you any data on that. I can't give you any refinement to that. You following yourself, there's no way for me to refine the path you're following if I don't even know that path. I don't even know what you're doing. And that's not you, that's anybody in general. I had one guy who came in and said, hey, so what do you think about the 30% of the new week opening gap? What do you think? Can you take an entry on the 30%? I'm testing it to see if I can get a trade off of the 30% of the new week opening. Okay. And the same people turn around when they struggle and blow accounts and can't get it and have a hard time understanding. It's like, what am I doing wrong? I'm watching the playlist. I'm back testing. What am I doing wrong? You're trading the new week opening gap. That's what. Trying to use what I teach with a new week opening gap. I told them about the no bets policy. They didn't. So let's move forward with this. So somebody said the origin. Is this what you was talking about? This somebody said, I saw a few people here said the origin they were taking entries from. Is that what y'all were calling the origin? So what I will say is there is a possibility of trading down into this, not taking that low, and trading back up into them. There is that possibility. And that's why when price is running away, like let's say price is dropping down below, when it's running away like that, I oftentimes tell the students, or at least even some of the people in premium, we're managing our trades in the morning. It's that runaway, now you're trading underneath candlestick lows when you get that run. So just like if you were to get that run upwards like that, you're in an entry and it's just a whole bunch of green candles is popping, and you're already above a previous high to the left or something like that. You're trailing under these lows with looking that price possibly settles back that way. And that's why when that move that some of the ICT people talk about, that Judas, when they see it go up and then they see it drop back down like that, let me just change the color. They're looking at, hold on, sorry. They're looking at the imbalances in here, or the little zones that's in here, or whatever it is, to take an entry off to trade higher. And it's not until it goes down with the same momentum and runs all of these people out that they realize, oh, wait, it's Judas, or it's a liquidity grab, or whatever it is. And be mindful, because price can do that and go right back up and then get them up there too. So it just matters what the narrative is too. But this is why when you have those imbalances that are forming, just moving up like that, you begin trading underneath those trailing underneath those candlestick lows, trailing your stop under that, knowing that there's a possibility of heading back the other way. And if there's a zone or something that's like here to the left, then obviously a re-entry could be possible here. That's risking what? What is it risking? It's risking whatever profit you were able to squeeze out within that entry up here. Now it's a smaller part down here that you're willing to risk, just a small amount of what you just received to be able to what? Potentially get more going back up on the other side. Rather than having to go up in profit, down and draw to up in profit, down and draw up. You're setting yourself up to be able to take multiple entries with a management that pays you first. It pays you before it can find the next move. So super important. And to me, I'm sure I've seen you trading. I know you wouldn't have taken that either way. I told you guys, when you have a zone, let's say whatever it is you're looking for price to react on, when you see a large candle coming into your zone, I don't care if price buys that whole candle right back up. It's not a good, look at y'all. Y'all got me teaching management today. It's not a good practice to see this occur and think that your penny lot size is going to send it back the other way. And it must stop at your entry back here. It must stop there. I don't know. Does it stop there? Let me see. Let me click it 2 candles forward. Hey, they got some money there. And Greed would have took him out. If oh, man. Love that example. So, let's bring this here. This goes back to what we mentioned. So we ran out the low right there, right? That's taken. Now, we see price drop a little further. For me, largely due to the fact that this in here becomes it's the top of a higher time frame down candle. I could begin looking here for a move back into here. I could begin looking for one. If I find, that 5-second shift to turn back the other way, I could be looking for that move to go there. Now, I do know that we have the 50% just below that, right? But I'm taking into account the down candle on a higher time frame. So that's me. Now, for anybody else, they could still be short down into these areas here to the left, back to the origin of the move, wherever it is they have price going. So, where are you guys in an environment? And this is why you guys got to be honest. In an environment like this, where are you looking to take your entries in an environment like this? Now, let me clean this up. Let me, because I know some of y'all are on your phone too, so you're not really able to participate with chart. So let me drop that in the chat, and you guys drop that picture in the chat, and you guys can mark up that picture if you want to send it back too. Okay, some pretty good answers. Everybody waiting down for the 50, but if sure enough, if you see a lightning rod pop out to go to the other side, I promise you, some people be chasing it. I told you I said around here I'll be looking for my. But that's just for what? Didn't we already have the target? Why were we expecting it to trade up to this high here? Now, it's not always that it does it, but that's a good measure in terms of target. Somebody said, that's what you taught. That's right. That's true. That's what I taught. But also, yes, it's not a part of structure. So oftentimes, these areas become the target that price snaps back to. Now, for me, Oftentimes in New York, from here to here is already like, 8-10 points that I'm seeing immediately off the snap. So that's just the experience that I have in terms of back testing and forward testing, and I can respond to that. Certain people cannot take an entry like this. Certain people would have to wait for the 50%, have to wait for their rules that are below. But because I've back tested, forward tested, created different kinds of ways to engage with price based on how I'm comfortable and how I'm willing to tolerate that risk, that's where I can take that. It's just not always the same for somebody else. I need more experience before I would put on a trade like this. I'm just not there yet. Hey, that's okay. That's fine. Listen, I tell people the number one thing that profitable people, the number one mindset they have is self-awareness. Awareness of their limitations. Honest with that. And work around that. Work around that. Just guessing. So we don't want to see that, empathic trader. We're not looking for people guessing. We don't want to see that. We don't want to see you guess. We want to see you say where your entry is going to be. That's what we asked. Where are you going to start taking up entries? Not guessing what you think price is going to do. Because when price is going to bounce here means nothing if you don't know how to get engaged with it. Because price can bounce here, go up like this, right? Drop back into here and fail and drop down there. And now you were trying to get into a trade to go higher and it dropped lower with you. Because you knew it was going to go there. You knew it was going to bounce up here. And you had your sights on something up here. Without waiting for some real structure shift to actually take place to guide your decision of why you're going long. That's the squirrel attention span. So we trade back into that previous range, and we just see green candles heading up. Is anyone looking for a short here? Like I said, multiple green candles. Anybody that's long, you already know you trailing behind the lows of these candles. Now with that momentum back up. Okay, good. Yes, S&D responsible. You out. Momentum. You see this move going down like that? Into this move going right back up, the same momentum, V-shape. You watch the playlist? Video 1. that momentum down into that momentum right back up again. We talk about the V-shaped recovery, right? That we often see price make. So with the V-shaped recovery, even if should price fail and start to trade down again, you're going to find opportunities to be able to head down with it. But a rule of thumb is not trading against it, not trading against it. So as you can see, there's this large extension up into here, right? Let me just move forward a little bit. It ends up going and take out this high, right? So let's delete this here. Now let's say we called this our high and low, right? Let's say out of lack of awareness, we called that our highs and lows, right? Even so, we have structure within here. Let's see, close that. That trades up. Failure to put in another high. That drops below. So 1 minute structure has been broken many times inside of here. But higher time frame structure, it's from here to here. And then a higher time frame dip into here that brings us back up there, but it fails to close on the higher time frame. So we have this drop down like this. And if this is a low on that higher time frame, that means that this is a wick. You guys see that? If this is a low on a higher time frame, then that means that this trading down into here and right back up again is a wick. So what you're doing on the higher time frame, whatever you consider your zone, this is equivalent to a large candle going into your zone. Just the same way we mentioned it there. It's the same thing that applies on the higher time frame. And all this ends up being, this is a 12-minute pullback, 15-minute pullback as well. Okay, so this is still a body, but what it actually is just a higher time frame pullback. So this is not even a higher time frame low. So that means that, again, we mentioned what? We said that going back into your zone, that's what? A large candle. You see that one candle? The 5 o'clock candle? On the 15-minute, that's a large candle going back into your zone. So even if you went down by lower time frames, it's the same thing here. Large candle here, right? Large candle. Look at this. Let's even say you use that. Large candle in your zone. It's just a rule of thumb for you guys to consider the entries that you're taking and the momentum that you're trying to take a short against. The momentum that you are trying to take a short against. So we go all the way back. And we trade higher. Now, for plenty of you guys, let me just get some of this out of the way. Some of these drawings. I don't know why my keyboard doesn't have the continuous keys right now, the function right now. But if you guys look at this, trading into this area, this is one of those times that you miss the 50%. And why is that? What did we just learn? We just learned that this is a higher time frame pullback into a higher time frame continuation. Now we know that based on just shuffling through a few time frames up to see what's a part of structure and what's not, right? So you guys hear me say that all the time. Is there any low here that's a part of structure? Any of these lows on the 12 minute? So when price makes its way back, yeet skabit happens to who? And here we are trying to take oh yeah, it's this fractal into this down move, and sometimes I see them put a box around a doji, so it's probably that, and then it's just gonna go higher up there, and maybe we could use this imbalance here too a second time, and then we'll trade up. And you know what? Let's also bring that inversion from across right there. All of this stuff is helping you not to see simple things. Equal highs, run the lows, right? Higher time frame. Lows that were put in that were not a part of structure. When the short comes out of wherever it comes out of from the higher time frame, what does it go and target? And after those are taken, what happens? Higher time frame to lower time frame, lower time frame to higher time frame, higher time frame to lower time frame, lower time frame to higher time frame. And this is why when I tell people, and tell me I'm so mean, you're so mean, and tell people about how they should follow structure in videos 1, 2, and 3. And I say, keep it on your chart. Keep structure on your chart, because then you're going to see what price is targeting most times. The target opens up to you, not just taking an entry based on structure. The target for what price is reaching into from any and all time frames that exist opens up to you. But no, we just got to chase the zones and chase the high, and then that's it. We just wherever we can, anything. We just get in on everything. We're just gonna take every single trade, and then we wonder why we can't hold trades. We wonder why we can't find consistency, because we're not incorporating the things the way that it's instructed to incorporate. The playlist is literally a building of how all of the concepts are used on every time frame. So now if I went to go and find a 1-to-1 on a yearly chart, oh yeah, you're going, you're saying I can't find a 1-to-1 on a yearly chart? Welcome to last year, October, when we called the low of Euro USD based on the same concepts. 1-to-1. But we also had it trading up into this zone up here. That from this low to this high there. So you just put it across that way. But nonetheless, a yearly, a 12-month, 12-month 1-to-1. Oh, hold up. I got to go all the way back to what the. It's a 12-month 1-to-1. And they want to catch all of the moves, and they just don't want to slow down and say, hey, you're not in a rush. You're in the right place. But what you're learning is a lifetime skill that takes longer than a turkey to bake, you know? It's gonna be a skill for a lifetime. Do you know how many people wish they were piling in longs from that bottom? Yearly. That's a yearly chart. You go to a yearly chart and just boy, I tell you, rice still going up. Yeah, it's still going up. So let me move some of this forward. Hold on. And then we got the high taken out right there, right? So now we know we have nothing here other than the high of this previous candle right here, right? So what I would think is, I think that we'd find another move up here into something down there. Maybe toilet paper people come out and drop into that way, fake them out that way. That's how you see those little things form. Hey, that's crazy, ain't that? And then reassess. So unless we get stuck here, if we end up getting stuck here, then we're looking for to trade back into the slower portion here. So what are some of you guys thinking? Stoic, I'm telling you, listen, go on the currency pairs or on bonds maybe, or like even another country's thing. Go do some like exotic mixes. I don't know, the peso versus the Mexican peso versus I don't know, whatever Brazil uses. Whatever it is. Mark that up on the 3-month, the 6-month, and the 12-month. And as a couple months go by, pay attention to what a lot of people are doing within that pair. Whether they're bullish, whether they're bearish. Some people just stay bullish the whole time. They don't look for bearishness at all. Other people look to start to go bearish. They get a little bit out of it, and then it flips back bullish the other way. Go to these higher time frames. Mark out these things on the higher time frame. And just watch everything for months. Watch people flip bullish, flip bearish, flip bullish, flip bearish. Even the people who are super bullish, now they're bearish. People who are super bearish, now they're bullish. Watch how all of it just flips out. Everybody flipping back and forth on this one thing. Wow, we're on 3-month, 6-month, 12-month charts. And saying, oh yeah, come on. They clearly give a 1-to-1 right here. Never has there been a time where I did not see. On that time frame, of course. But I'm gonna do the macro session with you guys coming up. It's where we look at all of the pairs, every single pair out there, even stocks. We can do whatever it is. What we're gonna do is we're gonna look at only monthly to 12-month charts, nothing else. We don't care about what's below. We're forecasting what the next few months is about to look like with a lot of these different pairs just based on what we understand from candlestick structure, from intermediary structure, and from institutional structure. So let's move this forward. So Arkham, looks like you got yeeted. I want to work on a swing trader portfolio, just 1 2 months. It's gonna be incredible, incredible. I'm telling you, it's gonna be incredible. Just know, look at these alerts to the left, right here, right? Just know that. So this was, I was looking at Microsoft, Meta, NVIDIA, and Apple. So looking at these, I was watching how each of them hit highs. I was expecting highs to be ran from all of them. So each of them hit highs, but if you look at the time they were triggered, this was triggered 1336, November 16th. The next one was triggered 1533. That's Microsoft, then Meta's high. NVIDIA was triggered 1536 shortly after Meta's high. And then look at Apple's high. Apple's high was triggered 4 days later at market open. So it's interesting that they all took their time, even though the exchange was going up, the index was going up, they all took their time to actually clear certain highs and lows. So that also means that they'll also all take their time to actually respond to zones, whether it's 1-to-1s or whatever it is. So using that information now you know that you can date some a bit longer than others. You can, like the expiration, you can change the expiration dates and not keep all of them the same, but spread some of them out based on the volatility in which they reach their highs or not, or they respond to zones or not, just from the higher time frame. I was only using the 144 minute, but of course, if you go to like the daily, the weekly, things like that, you know, interesting enough, everybody loves using the 30%. And when you guys do actually learn about it, you guys will learn that it was Apple that taught me that. Just back, y'all hear that? Wouldn't even make it, didn't even find it making money. Back testing it on a pair that I would have never executed a trade on. So that's why it's important to do those things as well. You know, have multiple pairs you're analyzing, even if you've never ever traded a day in your life. So what are our positions here, guys? Bro, I'm in this mentorship for life. Hey. Listen, I'm telling y'all, there is so much that you guys cannot learn in a month. Neither can you guys even learn in a year. Neither can you guys even learn in a year. But there's enough that if you work as hard as you can and you learn as much as you can within the rules of structure and within the rules of zones and within the rules of being content, profitability is very, very close. Like extreme. I told you I became profitable in a month. So that was a month of being disciplined with something. That it doesn't, I don't use trend lines anymore, but I was disciplined when I was using them. So a fool could be disciplined in one thing and still run circles around everybody else because of their discipline in that one thing. Guess what that is? Being a fool, baby. Their discipline. So the purpose of this group is to push that the hard as a rock kind of discipline, because that's gonna carry you through all the information. That's what's blocking you from even taking in the information, is the lack of it. So when you put that in your everyday life, when you put that in your approach to the market, now it's going to attract profitability to you. Profitability loves consistency. It loves it. It's like a moth to a flame. Profitability loves consistency. So even if you're a consistent loser right now, you still show up and you're consistent. And soon enough, those numbers change. Those numbers change. And for me, I was willing to lose so much that I started to win. And I was like, wait, hold on, this is becoming way too easy now. Whoa. Then I started trying to lose. When I first actually learned it, it all clicked. I was like, no, I got to lose. There's no way. Let me just put a trade here. See if this is a leak. No, all right, let's test this here. Let's go to this random bid then. Oh, no, you didn't. No, I was shocked. Trying to lose and I couldn't. That's once a click, though, y'all. Once a click, all right? Once a click. Do you get premium rents? Ooh, they get skinned up there. Oh. We talk a lot more about numbers. So is anybody long here? So this is what I want you guys to remember, guys. Remember this. When we are here, especially within these overextended environments, you see this push up like this? Up above this former high? You see this push up like this? Remember, I said, should we get stuck, there's a possibility that we can trade back down that way, right? But the thing that I want you guys to remember whenever you're up in these elevated levels is that you should be careful of taking longs in these environments at the top of the range, right? Now, what can change that? What can change that is that price can break out and get to the top of a larger range now. Sorry. So that can change that. So that means that when it drops back into here, you're not looking for a move higher. You're looking for us to go lower. Because now this is the top of the range and this here is the bottom of the range. So your decisions to long come from here. Your decisions to short come from there. Now, that doesn't mean that you just short every time you think you're at the top of the range, or you just long every time you think you're at the bottom of the range. and I don't know degen stuff, but it helps you with that internal compass or that discretion you could have in when you're willing to get involved versus when you're not. So remember, I said I was willing to get involved after we traded below here, right? Why was I willing to get involved in that? Because I know that we traded here, tapped into that, shifted away, and we just consolidated above where we originally came from. So this is a range. This would be the top, and this would be the bottom for me. So I begin to look to get involved at the bottom of a range that's at the top, and I'm aware that it's at the top. That's why I said it would be a scalp, because I know that I'm technically playing with a bit of fire to look for longs at the top of the range. Because when price ends up flashing downward, those are the entries that it doesn't go back to. It might go and tap something here, there, some imbalance that formed after you took your long and then shorted, and then it trades further down that way. And that's why trading without a stop loss is ludicrous too. And I'm not talking about the wrapper though. So let's click forward. It's nice a couple people said they were long. Now, remember, this is an imbalance here. So are we expecting, I don't know what other imbalances is back here. I have no idea. But whatever other imbalances is back here, I'd be expecting it to fill. So look at this. Look at this. You guys see the high of this candlestick of nothing that exists back here? Other than the high of the candlestick, nothing exists back here other than this high. You guys see that? Now look at price just right next door to it. Look at how it trades up above it and then whoa, right the other way. Up above a high that we have no idea what's back here. But it still climbs up above it, and then has that drop. So this is why I tell you guys, wait for something to be taken, because the likelihood of you guys finding a short after something is taken is higher. Not saying that if you wait for something to get taken, you can, definitely jump into a short and hope you get 3 points out of it. No. You still want to pay attention to your confirmations. You still want to know what you're tapping into in order to time that. But have a criteria. So even though this is the top of the range, if we end up taking that high out there, I'd be looking for a long back down into here. A short back down into here. And if we trade back into here, I'll be looking for a long that way. And this is literally how I plan my trades, y'all. When I see these large extensions here like that, there's another large extension here like that, this is how I plan my trades. I'm literally just waiting on two things. Just go higher or lower. That's it. Nothing else. I'm waiting on two things. I'm either waiting for price to go higher or waiting for price to go lower. That's it. Nothing else. There's nothing else I could do. Overextend it, wait for it to trade a little higher, or wait for it to drop lower. My longs can't happen up there. My shorts can't happen below there. So now I'm already stuck. My plan is stuck in the rules of what price actually does. And I can't trade outside of it. So that's why I say price before time, because you're going to notice those things in price. regardless of what time it is. And you're going to adjust your appetite to that thing. I always tell y'all that Lauryn Hill said that thing. You're going to see in price and be able to respond to it without even knowing whether there's news coming, whether it's don't matter what's going on. You're just able to respond to that thing in price. What price does. So we click forward. Why are we expecting price to go a little higher though? Did I tell y'all what I was thinking? Okay, we on the same page. Toilet paper. Okay. Now listen, sometimes they do get their bonus. Sometimes they do make a little money. So don't always think that because this is the case, that you can just play it on any side and anticipate that on any side. There needs to be other things that are kind of paired with that. You know what the V-shaped recovery is? The V-shaped recovery is toilet paper people winning. That's what that is. So if that's a way that the market moves, then at times there are moments where they do get money. They do make money. Because it is a way that the market turns around at times. So, remember, this is New York, right? Or almost New York. But you see how slow price is moving after 4:30? Where's London open? Which one is London open? For the Forex crowd, what time is London open? It's 2 o'clock or is it 3? 3, okay. So there's 3 o'clock, yeah. Yeah, it's just 3 o'clock over here. So look at this. 3 o'clock we open, we consolidate. We trade up, we consolidate a little more. We trade back to that open and then trade below it, right? So now everybody is like, oh my gosh, wait, but we were bullish and then we didn't get anything. So now we're bearish and it trades up above there too. Trades up above that way. And have we just waited until what? What time did we set to wait? 4:30? 4:30 right here. The first W would have been a quick scalp, and you'd have been like, oh, okay, yeah, that was the first entry. Okay, first target. We met. Let's take a breather, see what price does a little more. Y'all would have saw that drop. Y'all would have saw toilet paper people, and then y'all would have saw back the other way. And y'all would have just been looking for moves that way now. Had you just waited. But if you tried to time it when we opened here, you thought we were short, we end up going long. You thought we were remaining long, and we end up going short. You thought that this was just a move back below and it was going to go for the equal highs there. It went even shorter. Margin called you. By the time we got here, no coins to play the game anymore. All because what? Your participation within that time that you told not to trade because of not fully understanding this dynamic. So that's why that rule is given to you guys, not because you should take an entry because it's 4:30. You still got to figure out, what it's doing, but you don't feel pressure to get involved with a certain level of volatility that's there. That's if you're new, right? When higher time frame structure, a high and low is taken, order flow changes. Will you elaborate on that briefly on discerning the change in order flow? Yeah, video 6 Video 6 taught about the whole thing. You can sit there and take notes on the entire video and then read it back to yourself, and it'll be as if me telling you exactly how that happens, because I made a whole video about how that happens, so you guys can learn how that happens in that whole video. So take notes, go and backtest what's said in the video, and that's going to answer the question you just asked. The 12 versus 15 and the 1 and the all, that's my time frames. You don't have to worry about that. Find your own time frames in backtesting. Find what you see clearly in backtesting. I use 5 second, 1 minute, 12 minute, and 144 minute. That's just the time frames that I see what I need to see clearer, or what I want to see clearer, or what I've found I've trusted in backtesting. You will never trust the time frame I trust. You will never take the trades I take. You will never see the market the way I do. But your understanding can be developed if you do what's taught in those videos in backtesting. Discover it, search it out. So make sure you watch that video, because it explains exactly what you're anticipating when that low, when the high is taken. I gave multiple examples. I also went to the higher time frame and showed people from the higher time frame to the lower time frame how it looks. So just take notes, and you get that answer a lot faster than stopping me in back testing to teach on something that I already taught on. So toilet paper people is out. You see the candles are still small. Oftentimes, again, I'm usually looking for a short to trade either back into the range or just below it. So we'll see if they put in another high and then drop that way. But either way, this is where I begin looking for that move back into this range. And even if price falls, should it fall and trade below, like something like here, I don't need that whole move from up here for price to go and take that out down there. I don't need to be a part of that entire move, that 20-point drop or something like that. And look at what we do, y'all. So it's really about waiting until you see what you see, right? Waiting to see what you see. You are not going to know what you see as in a refined way if you don't want to back test. I promise you. What year did we say they're going to get it? What year we said he was going? Yeah, 2020. There you go, 2027. Because if you don't want to back test, I don't care how much you're around me. 2027 will be your year. So look, this is the London session. We haven't done any top down. We don't know what's back here. I don't have to know what's back here. I don't care what's back there. There's not the information that I now have to need to use something to the left. I don't ever need something to the left to trade with. The right side will always be how I take my entries, regardless of what's over there. Now, maybe it's nice to know higher time frame areas to know when you should account for those large dumps and drops that come out of nowhere. That's fine, But I'm not buying at the top of the range to be caught in a dump. Not am I buying at the bottom of the range, selling at the bottom of the range, or shorting at the bottom of the range to be caught in not doing that. Because I already have my rules that are forged in what the market actually does. So remember what I said when we were over here. I said my business is either above this high or below down here. Now that I've found a successful entry and target and delivery here, that doesn't change the fact that based on what I used to trade with, that I can't find an entry within here. Even if that happened, I could take that one too. And that's what scalping looks like. Just only M1. Just only utilizing what you know and you remember and what you can see and what happens all the time in backtesting. So when people are like, I'm confused. Is it the body or is it the wick? Go and backtest it. See what you're comfortable with. See what you see most of the time. What are you most successful with? If you're successful with just a wick closure, then cool. Go make money with it. And when you come back, learn that it's a body for a reason. And follow the bodies. If you missed the wicks, it doesn't matter. You missed it. Stop being greedy. You missed it. You couldn't get in it. You had no way. It didn't come back for you. No market structure shift didn't tap back into your 50 of the zone. It left you. Your level of experience got you left behind. That's it. Straight up. Got you left behind. You could not enter. No other answer. And in backtesting, it's going to develop that experience for you to help you to know when to and when not to, what criteria to use and what criteria not to use. It's going to make you confident in that. Well, how are you trying to skip the process of you finding confidence to trade? Isn't that ludicrous? You finding confidence to trade, you're trying to skip that process? What? You go to school all year and play hooky on the final exam? What? You want to be confident in trading and you don't want to. Everybody want to trade like Shaz. Nobody want to bet. Hey, yo. I think I would miss this reversal. Hey, that's fine. If you missed it, you missed it. That's it. There was no way to enter based on your current understanding of price. So how do you up that understanding of price? 10 times. 1 by 1. 10. That's 300 hours. Almost 400 hours I'm asking you guys to give. Because then you're going to find some stability. Then you're going to find some understanding that now you can survive each day. 10. Notes. That's what we said. Take notes. So guess what? Oh my gosh, it's question time. Guess where the answers are found? In your notes. In your notes. Not when we're coming to actually observe price and make money with. Asking questions while the market is open and we're reading it, and the questions are based on something we've already taught, unacceptable. You don't know what the play is with 7 seconds to go in the fourth quarter? You have the ball and you forgot the play? Ball is in, fellas. Okay, so what did coach say again? 7, 6, 5. So who's supposed to get it? Wait, where's our basket? What? Hey, listen, all I'm saying is that you guys can learn at a faster pace. But you guys can learn at a slower pace too. And guess what? Guess whose hands that's in? That's not in time. I was taking $1,000 out of the market a day with 1 month of understanding and the same discipline, doing the same stressful, stupid trading. It didn't take long. How long is it going to take you to discipline yourself? That's what's really stopping people. I promise you, that's what's really stopping people. That's what's really stopping people. I watched my kid put together a computer with barely any guidance while I was building my own. My kid watching the videos, going through these long 2-3 hour builds, these 7-hour instructional videos from sunrise to sunset, 2 weeks in a row, and then go to put the computer together with no guidance. Hold the Drake. Go to put a computer together from scratch, from nothing. And even parts where I made a mistake was like, hey, no, it's not that first. It's the other one first. So it's what we're disciplined with. It's how we use our time. We go to school and say, hey, guys, I put together a computer. Your friends are like, what? You're out of your... No way. You're... All of it yourself? They couldn't even believe it. Look at you, Bob the Builder. And it's so much cheaper to build a computer than to buy one. So it's about what you know and how you apply what you know. But if you show up every day asking questions and you don't have a minimum of what you know, if you don't have a minimum of what you know, then you have nothing out there. You're just gonna be ragged and tagged. Ragged, that's right. You're just gonna be bagged and tagged. Or is that the profit part? You're just gonna be what I feel. Oh no, that's when you go in. That's when you get in. You're gonna be whatever it is you're gonna be. You're gonna be on the other side of whoever's profitable in that trade. Stop feeling. You're gonna be on that side. So let's click forward. Let's look forward. Is anybody looking to take any entries within this area? And the reason why these videos are as slow as it is, I'm gonna put a picture in the chat for you guys to mark up if you want. The reason why I speak as slow as I do in a lot of the videos is because the market is moving at that same momentum too. The market is moving that same speed. So if you're speeding up the understanding, but you're moving slow with price, that means you would be moving too fast. You set yourself up to practice in a market that doesn't move the way you practiced. The market does not move the way you practiced. But that's habits, right? So let's go forward. Somebody says short out of this zone. Okay. E-Money, how you posting what's back there when we already said we don't know what's back there? What you got back there? What's there? You got some box up there. We have nothing back here, and you the one coming in the chat posting something back there. Like we don't know what's back there. We don't care. We're not paying attention to that. What we're using is the right sign. That's how we get involved. So you got to know what you're seeing. What I'm doing is giving you guys baby steps of order flow. Baby steps of order flow. Without the detail of everything that's happening, I know exactly where the idiot box is going to form. I know exactly how many times the idiot box is going to play the low versus the high. I know what happens after price leaves the idiot box. I have the detail for all of that data already. How to know the exact move to take after that. But I can't introduce you guys to that detail yet if, we're still having trouble with knowing like where our entry is. There's no sense to refine poor entries. They're poor entries. You refine better entries, not poor entries. Your stop loss tells you that you have a poor entry. That's a bad entry. That's what your stop loss tells you. That's why you use one. And it helps you to get a better entry. But when you get a better entry, you can find an even better entry by refining that same entry. You see how I ask people, I said, what are you guys, where are you guys looking to get in? People sending me what the market is going to do. I'm not asking what the market is going to do. I'm asking you where you getting in. Not what you think is doing. Where are you getting in? That's the question. Everybody keeps sending these markups about, oh, it's going to do this. No, where's your stop loss? Where's your take profit? Where is your entry going to be? I mean, maybe you ain't got to do all the stop and take profit and stuff, but where is you got to know where your entry is going to be. Okay, yeah, the market is going to do that. The market can go here. The market can go here and right back up there again. So what happens to the analysis of you thinking it's going down? The minute it pulls back up there and you go to take a short out of there, guess what? -1R before 10:30. You better off taking the trades with those people on Twitter. You gotta know where you're getting. You gotta know what you're targeting. Remember, I'm trading a little lower to the low. I'm looking to get a little lower to the low. So did anybody use this here? Anybody use that fractal? Because we pay attention to a lot of these other things, and we don't look at the detail of what's there. So even if that provides a move off of it, it could provide a move back up here and still trade right back down below here. Like that. So somebody else said they're shorting out of this, right? What's this person name? Let me see. Looking at these charts real quick. King, what exactly are you trading? Is that a breaker block or something? You have this marked up. You saying this is your entry, and you're targeting this low. Yes, sir. Okay. We're gonna walk through his entry, y'all. TB Smash, right? That's amazing. My man said his entry right there, his stop behind there, and his take profit right there. 4R trade, beautiful. But I do not teach this at all. So unfortunately, you missed a ton of entries within here that you would have been able to take and find confidence in taking multiple entries when price presents itself in multiple ways. That's the part of learning what you're learning and trading what you know. This is trading what you know. But if this is sufficient to trade what you know, then you don't need anything else. You don't need an understanding. You don't need to learn anything more if that is profitable for you. But I don't teach that there. So as I mentioned, this move, how we could still get an entry down here to take long before seeing us come down to take this white line here. Right? Seeing us that come down to take this low. And that largely has to do with two things, here and here. This low gave us this high, and this high here was this low. And consequently, we took out both of them, or at least an equal low there. So I'd still probably expect price to trade through there and back up that way. But that was the giveaway for targeting this low down here. But there was still plenty of opportunities in terms of longs. Sorry. Plenty of opportunities for longs into shorts. Remember, you're trailing, right? This here, this move from the top up here, what I mentioned about this here is that we don't know what's back here at all. But we know that within price being overextended, we watch for that to be taken, and then we watch for price to trade back into what? The previous range. So this is solely based on what's here, not based on what's to the left, not based on anything on the higher time frame, just here alone. So the things that undergirds our understanding of narrative is that the equal highs, they take out both lows. This inside low and this other one here. So that's why the white line was left to this low, because this low put in this high and tested this to trade higher. So this low is originally from this consolidation. I mean, that high is originally from this consolidation. So oftentimes I would mark the inside low here, because what I've seen at times is if this was the higher time frame low, let's say it was down here, and we ran this inside low, oftentimes you have price trade into this like a zone, and you can see price trade higher. But the people who correlate pairs, they'll see that for this low, ES took that low and NQ did not. But if you don't correlate, it's still, well, you should not correlate. It's better that you learn how to trade what you're seeing on your chart than cross-comparing it to another pair that made a low and the NASDAQ can just make a low right after it. That's something that's going to sort of mess with your bias, mess with your understanding of why you're getting involved, because something else is doing something else. But the chart you're trading is not doing that. It's not saying that. It's saying at least to here, at least to there. Those things start to stand out to you when what? When you miss that 50%. So the problem with this here is that we don't know what we went up above to the left, but we also know that this is a part of the top of the range on a higher time frame. So should price trade aggressively into here to then go and attack the lows, we could see a nice entry below here back up into there. Just by having the rule of top of the range, we eliminate us holding on to larger time frame moves with a large amount of risk, or us trading larger time frame areas and wanting to reduce our risk in it, and we keep getting stopped. We keep getting stopped. We keep getting stopped. We keep getting stopped as it's moving down into a low that it's looking to take, and then head back up into that direction to clean out those highs in there. So narrative is far more important than anything else when it comes to your entry, because narrative gives you your target. It gives you where your entry point should be considered, but where your take profit is. Let me just take this off. Hold on. So there's a move shooting back up into the range. With this here, would anybody be considering going long? Oh man, this is all video one. It all connects. Yes, it does. Yes. Yes, it all connects. Yes, you're absolutely correct. Every single video that I'm teaching comes out of video 4, formerly known as video 1. Every single thing, every single video, even the new stuff, the old stuff, whatever it is, it all derives from the same thing happening on every single time frame. You just have to know how to see it. But the same thing happening on every time frame. Structure is still bearish. Nah. Where's structure bearish at? So you're saying here, structure's bearish here? So what if structure was here? What would say that it would, and that's how, a lot of the times, that's how we get stopped at times. We're ready to continue short because we believe structure is still bearish, and then you can see us clean this high out right here. Remember what I said about here? Remember when I had these drawings over here? I said that even though this is the top of the range, this is still a range within here. So it's a range within a range within a range. So we had a little drawings over here, the little yellow drawings. So I can go back and get it. Right here. So you see how it chews through this? unnecessary loss that somebody would end up taking because what? Not taking into account higher time frame structure, or not just that. We said that this was what, a range, right? You see this red line up here? You see the green line down here? This is how easy we forget where we are when we're actually trading. It's this easy to forget where we are when we're actually trading, because we want to keep our charts clean and, you know, all the mess, and, you know, things need to be organized, and we need to annotate, and then you forget the whole narrative that's even present. Because you're running behind the 5 second and seeing this flip after that flip, and then that flip, and then that flip, and then you go to the 1 minute and you say, oh, unmitigated zone above, let me just grab that, and then it can go further down there because what? Because the equal lows were planted. When I used to be a former Bissiite and Sibiite, we speaking on native tongue, Sibonesian, we said that the equal lows, if it so again, those things, you know, that one guy up there, he said he took that breaker. Those things are great for those one time that it holds and it shows, and it, those are great. But when the market is doing everything else, you're missing the understanding of that. You're missing the understanding of how to engage with that. What side to be on. So consequently, the next move of the reformed Sibyites, the Bissiites, they still don't want nothing to do with structure. But the Sibyites, there's some possibly save them. Look, we have this swing here that we trade right into it, and now you're trying to use DTFX structure to say, okay, yeah, these equal lows, price is going to target them, and you don't want to be manual intervened when you know, trading against it, and you see price just move back the other way, right back to that high. That's why I asked that gentleman, I said, where is structure bearish? Where is structure bearish? Hey, look. See, this is what I love about community. Fortes, look at his comment. That's a man that's been learning. Not even a 1 minute structure break up there. There's haste. Beautiful. So the market continues, and guess what? That's another couple of losses that were what? Avoidable. Whether it was an imbalance within here, whether it was a larger zone up there, whether it was the origin of the move up there, you didn't at any point in time need to be on the short side of this market, because we knew what? Top of the range, bottom of the range. So a lot of the times this is us in trading. And then what? Guess what? When price trades its way up and makes its way back down, guess who's buying here? Guess who has audacity wanting to see price go higher here? When we can yoke back below this, back into there. Guess who's buying up there? Because they're conditioned that higher, it's going to go higher. Price can go higher. So in an environment like this, wouldn't shorts back into the range still be prioritized? Because after all, we're just in a range. 3 o'clock London opened up over here. By the time we got to 5 o'clock, we ended up here. And at 6, 7 o'clock, we still in the same area that 3 a.m. opened. Just running down and above and below and above and below. So that run, are we expecting these people to get taken out up here? And if they do, is that where we begin looking for a short back into that? I don't know. Let's see. I told y'all sometimes they win. But I would be looking for a long again through there. What? Was the 1-to-1 up here? 609? Okay. Whoopee! One to one, 609, right? 1609. 16009. We're at 16001, 50% top there. Deliver that out. Now, many of us are the person wanting price to come back in here and trade higher, and we can see it fail lower and take that out below, right? And after it takes it out below, what happens? Then a trade back up, right? And we're just running on the opposite side, not understanding what's happening. And we're just trying to take whatever is there, whatever is present. After missing this, why did you miss this? Because you didn't backtest this enough to be able to be a part of it. You didn't have the risk tolerance to accept the loss that was behind it, or refine your way into just having a smaller loss within the level that it traded to. If you go on the lower time frames. You see, that's the Bissyites. That's the Bissyites. This is them. Let me show y'all. There's the Bissyites. They got their profit. They allowed it to end up going into drawdown. The profit turned into a loser. Well, we're in these smaller areas finding these opportunities to be able to trade with. Quickly execute, step out, and we're gone. Stress free. Let me say that again. Stress free. I'm convinced that all you have to do is to become a millionaire is trade 1-to-1. 1-to-1 with a high win rate. 1-to-1 with a high win rate. 1-to-1 with a high win rate. That is the key. The reason why people think 1-to-1s don't work is because their win rate is low. That's why they think it doesn't work. The win rate is low. But if you have a high win rate, a 1-to-1 instantly makes you profitable. All right, so we trade back in here. I'm sure Stoic would have been in the entry in there, taking that long, as well as Blue Horse. You see how incredible this works? So the bottom of the range happens to just go back up there. And why didn't the zone hold? Wait, did it? Let me just see. Why didn't it hold? A trade structure and the market structure shift happened below here. And I thought I wanted to target the equal lows from there. Oh, the equal lows again got them? Oh my. Why does that look like Friday? They're just. And this is pre-New York. This is doing the same thing. That's us. That's us. I know. That's us. We find ourselves closely zoomed in. So guess what? We go to take the other. Oh my goodness. We go to take the other out here. Isn't that crazy? What y'all think they're about to do? No, what y'all think they're about to do? What? Y'all think they're about to do? Toilet paper, one B. What are you even doing here? Who invited you? This is literally we called the range from over here, didn't we? So this is literally how the Banana Republic is running on everybody. And then people finally see, oh, wait, it's equal lows run the highs. So if I just take a square and put it around that, then it should go higher there. Well, we see we're just in a range. But what did we say about a range? We said, even a range, you'll see hold structure. I'm not sure if we go. I mean, not short, long going below here. Maybe something in here looking to go up there. Maybe not too far up though. Maybe account for a lower drop and then. You see how foul that is? So look, that drop, these people, they get tapped out. Whatever move is here could potentially run there. But this is where understanding that the bottom of the range and the top of the range also have range breakouts and return to ranges. But you got to know where, when, how. All of those things are in the detail of, the extended course. But not following structure and not knowing what to do after structure is broken, or not knowing how to even get involved in price, you're going to get chopped up by everything else you learn. Because it's going to be insane detail I'm not even using detail right now. I'm just back to the basics with y'all. Telling you guys where my anticipations are. But it really starts with structure. See, look, not even a flip down here. I mean, I guess that's it on a lower time frame. Look at that put. Oh! Yo! Well, beat. That's you. But look at how a measurable understanding of knowing, wait, let them get taken out, observe that move, and then know your target. What? Man. Backtesting was bad to the bone today.